The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy hump day, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. You can catch my show every day, 3 to 4 Eastern on TFNN. It's also available as a podcast on iTunes if you can't listen live. And if you are not at your PC and you want to listen to the show, another easy way to do it is with your smartphone. Just open your smartphone browser, type in tfnn.mobi. Type that into your smartphone browser, and a page will come up, and you just click Listen Live, and it's as easy as that. Tiger TV on the homepage of tfnn.com. That is also available on your handheld device. All you have to do is type in tfnn.com. Over on the top right-hand side of the homepage, you'll see a box with some cell phones in it. Just click that box, and Tiger TV will start streaming on your cell phone. If you're at your PC, you can listen live on Channel 1, and the show is archived on Channel 13. So if you haven't checked out Tiger TV, be sure to do that. All right, well, where are we at with this market? We're back in an uptrend. We did get some mild follow-through from the NASDAQ. We actually had technical breakouts in all of the major averages yesterday. There was a little bit of volume behind the NASDAQ's move, the 1.3% gain. Kind of a mild follow-through day, but with indices, the fact that they hit new highs yesterday, that's enough to put the market back in an uptrend, which means you have the green light to start putting money to work here and seeing, kind of testing the water, see what stocks with strong fundamentals and technicals are working. And so you have the green light here. Let's just quickly check in on the major averages here before we go to our first call of the day. We'll start with the NASDAQ composite. It is extending gains here, going for 4 in a row. It's only up a fraction, though, to 32.24. Last check volume on the NASDAQ was tracking a little bit below the 1.84 billion shares we saw yesterday. And the S&P 500... we'll see if this is holding on to a gain here. S&P 500, yes, out for 4 wins in a row here. It is up just over 3 points, 0.2% to 1543. Volume on the New York Stock Exchange tracking pretty close to what we saw yesterday, maybe just a tad higher. Volume Tuesday was 680 million shares. 877-927-6648. Let's head over to Tampa, Florida, talk to Al. Good afternoon, Al. How are you?
Great. Thanks for taking my call.
You betcha.
I wanted to ask you about Walter Investment Management, and what do you think, if the bonds break down, what do you think they'll do for that type of business?
Well, when you look out, for fiscal 2013, 2014, a lot of these mortgage servicers, the growth prospects are looking pretty bright. I'm not sure if that's factoring in continued weakness in bonds, but as a group, it's still acting pretty well. We had nice earnings from Ocwen Financial a week or two ago, and then Walter Investment Management, I think, is coming out with earnings. Did they come out today? I don't even know. They didn't. They're either coming out tomorrow or maybe after the close today or tomorrow. So earnings are coming up for Walter Investment Management, as well as NationStar, NSM, which is probably my favorite name in the group right now. So, what I know right now is that they're really expected to deliver very strong growth over the next several quarters, and I think that's why you're seeing their price performance. And if you're a believer in the housing market continuing to recover, business should be pretty brisk for these guys, like I said, over the next several quarters. So Yeah, I like the stocks. The three main players in there: Ocwen, Walter Investment, and Nation Star. And out of the three, I think Nation Star probably has the most. Is my pick right now. I don't own any of them at the moment.
Mm-hmm.
But Walter Investment Management underperforming today. And again, I don't have. I can check on the earnings day because I know it's right around the corner. Like I said, it's either after the close today or tomorrow or Friday, but they're next day or two. So.
Well.
Yep, that's So Walter's underperforming today, down 2.7%. Nation Star, this one's flirting with a breakout. Now I know they come out with earnings tomorrow before the open. It's down 0.5% ahead of the numbers, but Nation Star is in a very nice technical setup here. Better looking chart I think than WAC at this point, and of course Ocwen has been doing pretty well since it reported pretty nice numbers last week.
Okay.
So that's my take. My favorite in the group would be Nation Star, though. If I had to pick one, I think they're the one you want to watch.
Okay, and that's NSM.
NSM, and we're going to get a lot of color from them tomorrow morning. I know Nation Star and Walter WAC, their earnings are within a day of each other, so I know for sure NSM is tomorrow morning. Walter could be tomorrow morning as well, or maybe tomorrow after the close.
Okay, I appreciate it.
Okay, Al, thanks for the call.
Thank you.
All right. Yeah, mortgage servicers. There's earnings visibility in that group. I mean, you look at the Thomson Reuters consensus estimate. For a company like Walter, which has not reported fourth quarter results yet, but they're supposed to do $276 a share this year. It'll be up 72% from 2011, and then looking out into 2013, they're expected to do $612 a share. So $612 versus $276, that'd be a gain of 122%. So pretty bright growth prospects among the mortgage servicers. All right, let's take a look at some names on the move here. Been mentioning TripAdvisor all week. This is a travel website that provides trip advisory services. Trying for a breakout today. Kind of disappointing performance. Cleared a swing point early in the session of 49.35. It hit an intraday high of 50.88. Was looking very, very strong early in the day. Now it is trading in the bottom half of its range, so kind of fizzling out here. Volume pretty good. It has already traded 4.1 million shares. TripAdvisor normally trades about 1.8, so good volume in the stock today, but the fact that it's trading near its session low after early strength, a little bit disappointing. You want to see good solid breakouts with conviction when a stock clears a swing point. Not seeing that, at least right now, with TripAdvisor. But still up 2.6% on the day to 48.92. Priceline, PCLN. This is flirting with a breakout over 722, working on 4 straight days of gains, but similar to Trip, you can see here it hit an intraday high of 728.70. It is now near its low at 719.69, up $1.28 on the day, only about a 0.2% gain. So Priceline having trouble so far trying to get over that swing point of 721.96 with conviction. So that's a look at Trip and Priceline. Qualcomm under pressure. Remember, we mentioned Qualcomm yesterday because the company came out, raised their dividend, they expanded a share buyback program, and what do they get as a reward? Well, Goldman Sachs takes the stock off its conviction buy list. So sellers are in Qualcomm today. Not terribly heavy volume, but it is underperforming, down 1.6% to 66.64. Meanwhile, new 52-week highs for shares of Ixia, XXIA. This another name we've been mentioning off and on for several weeks. Ixia, nice day of outperformance, up 4.3% to 22.26. This is another stock with very bright growth prospects. It's networking. They make basically network testing equipment, and growth prospects pretty solid here as well. Not a buy right now in my estimation. It Still outperforming, though. You can see several up days in a row and some decent volume over the past 4 days or so. So new 52-week high for Ixia and impressive recovery for lumber liquidators as well. Boy, it really looked like the bottom was about to fall out of lumber liquidators. This is a retailer, hardwood flooring retailer, going for... what is that, 6 up days out of the past 7 sessions. Hits a new 52-week high today, but trading near its session low after early strength, only up 1.6% now to 65.01. Had some economic data earlier today that was pretty good. The ADP employment change showed private payrolls up 198,000. That was nicely above the consensus estimate of 150,000. January job growth was revised higher to 215,000 from 192. So doesn't necessarily mean that we're going to see that this strong data today is going to translate into a better than expected jobs report on Friday, but it is certainly a distinct possibility. On Friday, non-farm payrolls are expected to be up 165,000 from 157,000 in January. Tomorrow we've got weekly jobless claims. They're expected to be up 6,000 to 350,000. And then earlier today at, I think it was 2 o'clock Eastern, the Fed Beige Book for March came out. 10 of the Fed's 12 districts reported moderate or modest growth. Boston and Chicago reported slow growth. Many districts also said that consumers held back on spending because of higher taxes, rising gas prices, and uncertainty over the federal budget. So nothing earth-shattering from the Beige Book today, but certainly all eyes tomorrow will be on the employment report for the month of February. So we'll see what that looks like here. And I'm going to just pull up and see if I can get an earnings date for Walter Investment. Al from Tampa called about Walter, and okay, you know what? Yeah, so it's so we have tomorrow before the open is going to be Nation Star Mortgage Holdings. Doesn't look like, it looks like next week we're going to hear from Walter. I thought that was right around the same time that that Nation Star reported, but it looks like a tentative earnings date, unconfirmed, of March 14th at this point. So that's that would be Walter Investment Management. U.S. dollar index, another big day for the greenback, up 0.5% to 82.48. So the strong dollar today, maybe weighing on stocks a little bit here. April gold, no movement at all, unchanged today at $1,574.90 an ounce. April crude oil down 39 cents, 0.4%, settles at $90.43 a barrel after hitting an intraday low of $89.55. Oil prices rallied late on that Beige Book report. A couple of oil refiners reporting earnings after the close today. We will talk about those when we get back, as well as an oil and gas producer with operations in the Williston Basin finding good support at its 10-week moving average. We'll check that out when we come back. Stick with me, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
After the close today, let's start by taking a look at Alon. ALON, Alon USA Energy, ticker ALJ here. Alon, holding above its 50-day moving average ahead of earnings. Beautiful breakout over $15 a share back in December. This one is building a base, but when a stock breaks out and then initially finds support at its 50-day moving average, we call that sort of a secondary entry point, but best to wait see what what earnings look like from Alon after the close, and possible you could see a heavy volume breakout here over its recent high of 21.24. But with the earnings risk clearly there, probably not something you want to jump into immediately ahead of earnings. We're also going to hear from Delek, that's ticker DK, another refiner, going to be reporting alongside Alon USA after the close today. DK, same situation here. You had a beautiful breakout in January. I think it was January 11th, thereabouts. Broke out over $28 a share and has been a solid performer. So shares of Delek down 1.9% to $38.84 ahead of earnings after the close today. Earlier today, the U.S. Energy Information Administration, the EIA, reported that crude supplies rose by 3.8 million barrels last week. That was not almost, but 3 times what was expected. Analysts were looking for a much smaller increase to 1.1 million barrels. We mentioned before we went to break that April crude oil today down 39 cents, finishes at $90.43 a barrel. Another energy name we want to keep an eye on here is Oasis Petroleum. OAS. This is a company based in Houston, Texas. Excellent supporting action at its 10-week moving average here. We actually have already heard from Oasis Petroleum, but very, very nice growth at this company in their latest quarter. Fourth quarter sales were up 83% to $214.3 million. Earnings up 63%. 2013 earnings expected to be up 27% from 2012. 2014 annual earnings growth is expected to accelerate, rising 37% to $325 a share. So excellent technical setup here. If you're looking for a name in the oil and gas sector, Oasis is definitely one to keep an eye on here. We'll switch over, take a look at its weekly chart, and you'll see the beautiful breakout that the stock had from a little flat base structure. This was back early January when a lot of stocks were breaking out. So here was your breakout here, and then support at the 10-week moving average for the first time after a breakout. That is an opportunity to start a small position. So Oasis looking pretty strong here. Bond yields right now, 10-year note at 1.94%, 30-year bond at 3.15%. Some financials still looking pretty strong here. Let's check in on shares of BlackRock, high-quality asset manager. Nice bounce off the 10-week moving average. This week's stock right now is trading at $249.73. So far for the week, the stock is up 6.2%. So very bullish week for BlackRock. And also take a look at Raymond James, RJF. We'll look at a weekly chart for Raymond James and see similar chart here. Breakout, support at the 10-week moving average. You see a lot of charts looking like this, and this is definitely, is going to give the bears the bulls some ammunition here, because a lot of financials bouncing off the 10-week moving average. That is strong technical action. So BlackRock, Raymond James, worth watching in the financial space. Commvault, CVLT, another name finding support so far at its 50-day moving average. This is creating a new swing point of 79.53. It's working on 3 straight gains, trading in the bottom half of its range today, up 2% today to 77, so outperforming nicely. And you can see support. It's been finding support at its 50-day moving average for several weeks now. So Commvault, this is a data and information management software firm. Not real keen on Zillow here. I want to talk about Zillow. It has certainly been a monster move for the stock. It's working on 6 straight gains here, up another 5.4% today to 49.97. It's above a swing point of 47.85, but I haven't been all that impressed with the volume, and I'm going to stay away from this one. It is technically a breakout because it cleared a swing point of 47.85, but I'm going to hold off on this one. A little too speculative for my blood. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Just finishing up some thoughts on Zillow. Zillow's a fine company, and growth prospects are very bright here. 2013 earnings expected to be up 75% from 2012, and then out into 2014, looking for annual earnings growth of 126%. So there is, and you couple that with very strong top-line growth in recent quarters. I think Zillow is probably the real deal. Just technically, recent price and volume trends in the stock, I'm just not a big fan of it. I didn't like this nasty reversal in heavy volume on February 14th. You can see here it went all the way up to 47.5 and then closed that day right at its low of around 42.50. And then you had what many would call a little handle area form here, multiple down days, about 6 down days in a row, I think. Some of those days volume was above average. Typically when a stock forms a handle area, you want to see volume totally dry up, and then you just kind of 6 days in a row up, decent volume behind the move, and it is a breakout. But this is just again, I have mixed feelings about the stock. We're not going to buy every single breakout out there, and we've latched on to a couple of breakouts recently I just like better than Zillow at this point. Let's check in on the markets here, see where we're at. 25 minutes left to go in Wednesday's session. Dow holding on to a 42-point gain, trading right now at 14,296. Tech stocks lagging a little bit, down close to 4 points to 3220. S&P 500 up just slightly more than 1 point to 1541. Liking the technical action here in Cognizant Technology Solutions, CTSA. Nice bounce off the 50-day moving average, working on 4 straight up days. This is, really a high-quality stock. Tech outsourcer, CTSH is the ticker symbol here. Very liquid, average daily volume of about 2 million shares, market cap of $24 billion. The thing you got to keep in mind here, though, is this is another stock. It was trading around 75 a couple of weeks ago. It is breaking out, but this breakout has been happening in very, very light volume, average to below average volume. So not really seeing a whole lot of conviction behind the buying when it comes to Cognizant. Google, of course, has been a big, huge winner, no doubt about it. It is under some pressure today, down $8.93. Only down 1.1% to $829.67. Apparently, over the past month or so, Google has been testing a same-day delivery service with retailers. It's called Google Shopping Express. Basically helps local retail stores sell products online. So, taking a page out of the Amazon playbook, maybe the eBay playbook. So it's interesting. Google's maybe trying to branch away from search here, going into building an online marketplace. So this news is weighing on shares of eBay. EBAY, you can see eBay under a lot of pressure here, down 2.9% to 53.64. eBay is trying like heck to hold on to its intraday low of 53.12, which was set back on February 26th. That's the intraday low here, so that is support. But big sellers in eBay today. Looks like they're, and Amazon could be seeing competition soon from Google as far as these online marketplaces go. Let's move on. Take a look at Pfizer, PFE, shares of Pfizer. The company U.S. regulators granted the drug maker a reissued patent for its multi-billion-dollar Celebrex pain drug. Basically is going to extend the drug's marketing exclusivity until early December 2015. Pfizer continues to be an outstanding performer. You can see shares up another 7 cents today to $28.14. With Pfizer, you're getting great price performance. You're also getting a nice little dividend of dividend yield of 3.4%. So that's a look at Pfizer. And then shares of RIM outperforming today, but it's not RIM anymore. My mistake. It's BBRY. BlackBerry. Take a look at shares of BlackBerry. It's been under a lot of selling pressure, still underneath its 50-day moving average, but the stock is up 7.3% today to $13.49. The news here is that Pacific Crest came out with a research note saying there's channel checks show evidence that the new Z10 smartphone is gaining traction in the United Kingdom. So it's not available in the U.S. yet, but it will be soon. So there have been concerns that the initial debut of the phone really wasn't greeted all that well. Pacific Crest begs to differ, saying, it looks like it's doing okay in the U.K. after all. So BlackBerry up 7.3% to $13.49. Check in on shares of Chihu, name we've talked a lot about. Great growth prospects. Market did not respond all that well to its earnings report. It was a darn good earnings report. Earnings up 10% to 22 cents a share. That beat the consensus estimate by 5 cents. Sales also did very well, up 65% from a year ago to $102.9 million. That was better than the consensus estimate of 93.7. Big jump in non-GAAP operating expenses. It's typical for expenses in a company in the early stages of growth trying to expand their market share typical for expenses to grow, but they were up more than 100% from a year ago. Stock was downgraded to hold from buy at Jefferies. Shares of Chihu right now down 8% to 32.03. It broke out in heavy volume ahead of earnings yesterday. So as you can see, still holding above its 50-day moving average here, just over 31. Other news out of China, Chinese internet firm Sohu. Let's take a look at Sohu, because this stock was up huge yesterday, 12% gain. But on speculation that the company was going to be taken private, Sohu today came out and said this is not true. So the stock, after a 16% gain yesterday, down 11% today to 43.26. Sohu owns about 2/3 of 66% or so of gaming site Changyu.com, CYOU, and you can see Changyu yesterday had a very similar day to Sohu, but it is down 8% to 29.68 after a 12% gain, I think, yesterday. Other earnings news. This is an example of how technicals can tell a bearish story before the actual headlines do. Obviously, the fresh market has been under a lot of pressure. We sold this stock a long time ago at a much higher price. The fresh market has been under tremendous selling pressure in recent months, basically since November of last year. It is down 8.9% today to 38.78. The fresh market is still in the early stages of expansion. They operate a chain of kind of upscale grocery stores, mostly in the Southeast and Mid-Atlantic at this point. They specialize in high-end meat, seafood, organic food, gourmet products, but just having a hard time executing here. The stock is, again, down 8.9% to 38.78. The earnings were up 13% to 43 cents a share. That missed views by a penny. Sales also below expectations, up 15% to 369.9 million. That was about 10 million below the consensus estimate. Same-store sales only up 1.9%. So disappointing results from the fresh market. And on the heels of strong earnings recently from Sturm Ruger, SWHC, Smith & Wesson, came out with outstanding results. Sturm Ruger is probably the gun maker. If you're going to own one, Sturm Ruger is probably it based on fundamentals and technicals. Smith & Wesson down 5.1% today to 970. Reversed yesterday in heavy volume ahead of the results. The numbers were very good. They just can't keep up with demand. Earnings up 225% from a year ago to 26 cents a share. That was above expectations. Sales also above expectations at 136.2 million, up 39% from a year ago. They also raised their full-year revenue guidance to a range of 575 million to 580 million. Right now, the estimate was 561. So, continuing to talk about strong demand. They are trying to keep up with demand, and the results were pretty good, but stock under a lot of pressure for the second day in a row. After the close today, it's going to be interesting to see what Solar City has to say. We mentioned Solar City yesterday. This company had its IPO in December at $8 a share. It is now trading at $19.39, up 4.5% today ahead of the results. And you can't rule out additional price strength here because, again, the stock has been under accumulation for several weeks. There seems to be some optimism about results. They are not making money yet. They're expected to lose 44 cents a share. Sales up 77% to 36.7 million. Solar City basically sells. They also lease solar energy systems to commercial and residential customers. Earlier in the show, we heard from Al from Tampa. Wanted to know about Walter Investment, WAC, a mortgage servicer. Let's check in on NationStar. They report earnings tomorrow before the open, and we'll see that NationStar is down 25 cents to 40.78 ahead of the results, and it'll be interesting to see. I like the technical setup here. I say fundamentals are bullish, technicals are bullish, but so close to earnings. Again, we said you probably didn't want to buy Chihu ahead of its earnings report yesterday. That was a good idea not to, and I really feel the same way. Buying growth stocks, especially fast-growing growth stocks, so close to earnings, the risk-reward is just out of favor in the vast majority of instances. Wanted to check in on shares of Workday. They report earnings Thursday after the close, so tomorrow after the close. This is WDAY on the NASDAQ. This is another new issue. They came public in October at $28 a share. Has been a tremendous performer. Has broke out earlier this week on breakout was either Friday, and it extended gains Monday, working on 4 straight up days here. But again, this IPO was in October at 28. It is now trading at 64.37. Workday is a provider of enterprise cloud-based software for human resources. The co-founder of Workday is David Duffield, who actually co-founded or founded PeopleSoft. Geez, I don't even know if that came out right. Workday was co-founded by David Duffield, who was the founder of PeopleSoft. Oracle bought PeopleSoft in 2004 for a little over $10 billion. So good pedigree here. Look for earnings tomorrow from Workday. Again, expected to lose 20 cents a share. They've been spending a lot of money trying to compete with Oracle and SAP. Good top-line growth expected, though. Sales up 81% to $78.2 million. Another enterprise software firm out here worth watching. We've already saw earnings from Click Technologies. That's when you had the big gap up here, but look at how it held on to its gain. Tried for a little while to fill its gap, but just buyers came back into the stock. New high today for Click Technologies. This is another enterprise software name, business intelligence software maker. Again, trading very well after its gap up, and another strong performer here with good technicals. Stock remains under accumulation, and hitting a new high today, clearing a swing point of 27.55, or actually trading right around that 27.55 high that was set right here back on February 15th when it gapped up in price. So looking pretty good. Tractor Supply. A lot of stocks out there still working quite well here. Tractor Supply, farm equipment retailer. This is really a perfect looking chart, but with the market following through like it has, you got to wonder why this one has not gotten going yet. That is a potential problem. Still, technicals look pretty good here. Been moving sideways for about 4 or 5 weeks or so. Last trading at 104.34. For the week, up 1.2%, but again, kind of a breakout that I thought would have happened already, and it is just kind of acting sluggish here. So, one to watch, keep an eye on it. Good, high quality company, but this is one it's made a monster move. We could just pull a monthly chart here for Tractor Supply and see the incredible price move it's made basically since the start of the bull market in March of 2009. So. Still showing relative price strength, but wondering why it has not broken out yet. So that is a look at Tractor Supply. And let me just see here. I'm trying to grab a... Okay. ACM, before we head into the break, another weekly chart here that looks good. Big move for the stock recently, holding gains tightly. We'll talk more about ACOM technology when we come back. Headed into the final break. Ken Shreve with you on Breakout Investing. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the major averages here. NASDAQ pretty much right at its session low here, down close to 5 points. Not a big percentage decline at all. Last trading at 32.19. NASDAQ volume tracking about 5% lower than what we saw on Tuesday, which was pretty much average at 1.84 billion shares. We did get follow-through for the NASDAQ on Tuesday's session, so that means the market trend has turned upward, which means it's a much safer environment to be putting money to work. But after early strength, NASDAQ Composite near its session low. S&P 500 Also, trading in a pretty tight range here, trading in the bottom half of its range, up fractionally to 1540, and the Dow Jones Industrial Average also trading in a tight range today. It is outperforming today, up 36, a little more than 36 points to 14,290. All right, let me pull back over here. I want to take a look at ACOM Technology Corporation. This is interesting company here. I do like the fact that it's been able to hold onto its gains after a very bullish move during the week of, what was that, February 8th. This is the week of February 8th right here, and it is just kind of holding gains, moving tight sideways. Could see a flat base form here. Another strong performer you want to keep an eye on. Definitely a stock that is under quite a bit of accumulation. Market cap of $3.25 billion. Very liquid. Average daily volume of 1 million shares. This is a company. They provide professional, technical, and management support services to a wide range of end markets, including energy, water, environmental, government, transportation, etc. Also wanted to take a look at Starbucks. Starbucks definitely showing signs of life out here. Starbucks getting into position. I don't know if it has. It was kind of flirting with a breakout over a swing point of 57.27. It hit a high of 57.49. So it just tried to break out. Volume not too bad in the stock. Not talking huge volume, but above average yesterday and above average today as well. This is a weekly chart, so stock that could be getting into position for an upside breakout here. Again, the swing point to watch is 57.27. Starbucks climbed slightly above that swing point today, hitting a high of 57.49. It is now trading at 57.08, so not quite ready yet. After the close, we mentioned the two oil refiners, Alon USA Energy ALJ and Delek US Holdings DK. They're going to be reporting earnings. We're also going to hear from a very well-run retailer, PetSmart. PetSmart has been under some selling pressure basically since December, and it has been rallying back. Basically has moved from 62 up to about 66 over the past couple of weeks. Still underneath its 50-day moving average, as you can see. Stock is up 59 cents to 66.53 ahead of the results. Look for earnings to be up 33% to $1.21 a share. Sales up 15% to $1.89 billion. Tomorrow, before the open, mentioned Nation Star Mortgage, NSM, that is a mortgage servicer, and also SRPT, another strong performer out here, trying to break out of a big long base that started forming back in November. So worth watching. Sarepta Therapeutics, and then tomorrow after the close, Pandora Media, ticker symbol P. So earnings season starting to dry up. Hope you stick around for the Tom O'Brien Show. That's coming up next from 4 to 6 Eastern. I'll see you back here tomorrow, folks, 3 o'clock Eastern, for another edition of Breakout Investing. Thanks very much for listening. We'll see you tomorrow.